Hello, this is Sidney Potter from Potter Equities in Pasadena, California. Thank you for your time. I've been asked to comment briefly on how to pre-qualify for building your own home. When it comes to pre-qualification for building your own home, the go-to sources are typically going to be banks, and they have what they call an all-in-one, a construction to permanent loan, a one-time close. They're all synonymous with each other, and that is the type of loan product you're going to need in order to pre-qualify and build your own home. Now, what I'd like to do is to give you a few tips on where to go in addition to those types of go-to sources. Keep in mind that nearly all banks have this type of loan product, all your major banks and certainly some of your credit unions. It's much similar in terms of the pre-qualification to build your own home, which typically means a custom home, as you'll find in buying a normal home. When you go about pre-qualification to build your home, find a very experienced construction loan broker. They're a slightly different breed from your typical loan officer, mortgage broker, because they specialize in the area. It's not really a time to go with the newbies in terms of loan officers, but you want to specifically a construction loan officer. Very important to have these relationships when you go to these types of professionals, because these brokers get class rate, low down, wholesale rates because they do volume. You're in a much better position in terms of getting that type of ideal rate, because building your own home through a custom broker or a custom home builder could be slightly more expensive than what you anticipate. Also, if you're looking for resources in which to pre-qualify in order to get a mortgage loan to build your own home, go to custom builders. They are typically an all-in-one stop inclusive location. Why? Because they certainly would have these relationships with lenders or private money in terms of financing, because it gets their product off the ground so much easier. And also, and lastly, in terms of going to sources, FHA, even though they have what they call 203 construction loans, those are rehab loans, where they cap out at $35,000 per home in terms of light rehab. That isn't really a construction loan per se, but certainly just to let you know about that. Now, once you have all your ducks in a row and you're ready to go out there and find the ideal financing, several elements that you're going to want to be consciously aware of, and in fact I call them seven wonderful tips. Tip number one, maximize your credit score. Just like a regular loan, you'll want to maximize your ideal loan in terms of your FICO score. Lenders will definitely look at that, and that's going to result in a much more attractive interest rate and terms that you'll get from the lender. Also, I would recommend when you're ready to pre-qualify, don't go out and buy big ticket items. Don't buy that Cadillac. Don't buy that boat. Don't buy those Seiko watches or those expensive items there in terms of a Sub-Zero refrigerator. Keep it very tight and keep it very prudent. Lenders will be looking at that in terms of the underwriting perspective. Secondly, and this is almost repetitive, but it comes down to credit and equity. We're in a situation right now where construction lending is much more conservative than 2011-2012 period. They will scrutinize you very, very closely, so be conscientious of that. Item number three, you will need a construction contract. Now, construction contract is different from the loan application. A construction contract is actually a contract between yourself, the borrower, and the actual builder of your piece of property. This is bank required element. Underwriting from the banks will want to see an actually inked, executed construction contract. Item number four, make sure the architectural schematic plans are executed as well. I cannot imagine, and I would certainly advise not a client of mine to go to seek a construction loan and you don't have architectural plans. Item number five, and this is to be conscientious in terms of your pre-qualification period for a mortgage home. Make certain that you avoid the bait and switch. The bait and switch in real estate brokerage mortgage financing typically occurs when a well-intentioned borrower is speaking with a loan officer, even a construction loan officer, and it seems like the terms or rates are just way too good to be true. Probably is, in fact. And in fact, if there are no fees or points, you can probably expect a higher interest rate on the back end. So be conscious of that. That could absolutely kill your deal. Item number six, hire a good builder, one who has insurance. Now, this is bank required. It may not be state required, but there are certain elements of insurance that are going to have to be in place. Not only are you a potential liability as the borrower, but also your builder, and those that give the money out will be conscientious of whether or not you're working with a credible builder that has insurance and has a positive track record. Lastly, it comes down to loan application. And this is what I call keeping your game tight, really. And that is when you're working with your loan officer who gets construction loans, make certain that that loan application does not have any loose ends, that there's no derogatory credit items on your credit report, that your income and the pay stubs that you're presenting are actually intact, okay? You certainly don't want to present a less than decorous element about yourself. Certainly that might even be reflective of the process when it comes to paying back that construction loan. So with that in mind, let me just close that this is what banks look for. They look for a very well constructed 1003 loan application, which is the Fannie Mae form number that you'll apply for. It will actually have a box that will say construction loan. You'll notch that off at the top. They'll look for compensating factors, why you make a good credit risk. And lastly, they have what they call story loans. A story loan is, what's your story? What, when, why, how, and how do you plan to repay this debt? And what's the story behind the loan? Good thing to serve these up nicely. Maybe consider attaching a letter to your loan application that gives a little bit of contextual background to who you are and what you want. With that, I hope these 7 items were very helpful. This is Sidney Potter from Potter Equities, Pasadena, California. I thank you for your time. I wish you well, and I'll see you at the finish line.